Hi everyone, Joe Gentili from Left Tail Risk Advisors. So in today's video, we're going to talk about foreign nationals owning property in the United States, and we're going to focus on real estate in this video, although this is applicable to other types of property ownership in the U.S. So I worked for years as an attorney representing immigrants coming to the United States as investors, and so this is an area where I have a lot of familiarity with through the lens of an attorney and also through the insurance lens. And so, what I've noticed in interacting with people is that foreign nationals, these are people who are not US citizens, don't have a green card, and don't intend on moving to the United States, but they have investments in the United States. Sometimes a common thing that I dealt with, for instance, is there'll be parents that are well off, they'll have children immigrating to the United States, and the parents buy property in the United States, either for the children to live in or for themselves to live in when they visit their children. So it's very common for people to have real estate investments and other types of investments as well, investment accounts, business ownership. But again, I'm going to focus on real estate investment. So it's very common for people to have real estate investment in the United States, even though they are not living here on a permanent basis. And so it's also common for people to have bought that real estate in their own personal name. And what I found is in years of working with high net worth foreign nationals is that a lot of them are very cognizant and they're very aware of the income tax implications of owning property or doing business in the United States. Very few are aware of the estate tax and gift tax implications of having property in the United States. So if you live in the United States and you're a permanent resident or you're a citizen, then US estate taxes and gift taxes apply on your worldwide assets. And that's a downside. One of the plus sides is that there's very generous exemptions or exemptions on how much assets you could own or pass before those taxes kick in. So right now, for instance, the exemptions, I think they're about $15 million per person. So a couple can pass, at least for federal estate taxes, $30 million or so before taxes start to kick in. Same thing for a lifetime exemption for gift taxes for what they give away during life. And there's also state level estate taxes that apply to, and sometimes those can kick in at a much lower level. Now, for foreign nationals that own property in the United States and don't live here, they're subject to a different set of rules. That really, really large exemption that exists for citizens and foreign nationals that have a green card does not exist for them. They only have a $60,000 exemption, which is pretty close to nothing. My understanding is that there's no expectation that that is going to change anytime soon through legislation. So if somebody owns a house in the United States under their own name and they're a foreign national, and let's say that house is worth $2 million, if they were a US citizen, they would be able to pass that house along either through a gift or after they pass in their estate, assuming that that's the only asset they have here, that would pass with no federal estate taxes or no federal gift taxes. Again, it depends on the state where there would be state level taxes. But now, as a foreign national, nearly that entire amount is subject to estate taxes or gift taxes if they would decide to give it to their children in the US. And those taxes are very significant. So that could be the federal estate tax alone or the federal gift tax alone would be 40%, could be 40%. And then you tack on top of that state level and you can get above 50% very easily. These are large amounts of money that their children would have to come up with in US dollars to satisfy very quickly within 9 months of passing. So this can be an enormous burden and an enormous problem if somebody has that. And this happens to a lot of people because again, while a lot of people are focused on the income tax, they are not focused on estate taxes. There's a benefit also with this, and that benefit comes through life insurance. So for somebody that's a US citizen or a green card holder in the United States, the proceeds of a life insurance policy, they pass income tax free, but they are part of the estate, so they are not estate tax free. So most people who are wealthy, they address that by having the life insurance outside of their estate in a trust, in an irrevocable life insurance trust, for instance, an ILIT, probably the most common way. People who are foreign nationals that don't live in the United States, their life insurance proceeds are not considered U.S. situs property. So they could own the life insurance in their name, and that passes income tax free. It also passes estate tax free, which is a benefit that foreign nationals get that U.S. green card holders and U.S. citizens don't. So a very common tool, and probably the best tool to deal with this estate and gift tax issue that foreign nationals have if they own property in the US, is to have a life insurance policy in the US that's US dollar denominated, that pays upon death and is there to cover that liquidity hit, that hit for the property that occurs upon death. So if you have that, $2 million house or $2 million apartment in New York City, there's a large estate tax bill that's coming due, lots of cash needed quickly. Life insurance is usually the way to address that. The life insurance shows up at the exact moment it's needed upon death. So you get instant liquidity upon death, and that is able to pay off the estate tax. So this way, the children or whoever the intended beneficiaries are can keep the house. Or if they decide to sell the house, since the house has passed to them directly, they get a step up in basis upon death as well. So if the value of that house appreciated a lot, they're able to get that. And if they sell the house, they're not going to have to pay gains on what the property is appreciated since you originally purchased it. So for example, if you purchased a property for $1 million and at death it's worth 2, then your heirs inherit the property at a starting value of $2 million. So then they would be on the hook for capital gains tax for anything above 2, but they wouldn't be on the hook for capital gains tax on the difference between the 1 million and the 2 million. So not only does the life insurance enable the liquidity of getting those US dollars in place exactly when needed to cover that estate tax, and they get it income tax free and estate tax free, it also allows for the property to be passed with a step up in basis should the property be sold later on by heirs saving income tax. So it's a really, really efficient tax play to use life insurance in this situation. It's very helpful. I think this is a very complicated planning situation. It's not something that I would say 99% of life insurance agents and advisors are not aware of this. So this is an area where you really want to work with somebody that has the awareness and the proper experience to help in this situation. Like I said, I've worked as an attorney for years advising foreign nationals on U.S. investments. So this is an area where we're really comfortable in dealing with, and I think that's important in this particular niche because it's a complicated one. So if you have any questions on this, please feel free to reach out. As always, I encourage you to like and subscribe to this video if you found it useful. Thank you.